The best investors never check their portfolios on red days. What does yours cost you? Because here's the part nobody tells you. Every time you check your portfolio during a downturn, you're not gathering information. You're taking an identity test. And most investors are failing it without even knowing the question was asked. Today, the S&P dropped 0.5%. The Dow fell 0.51. The Nasdaq down 0.32. A nothing day. A rounding error. And yet right now, thousands of investors are refreshing their accounts, calculating losses, feeling something shift in their chest. That feeling? That's not market analysis. That's identity collapse. Marcus Aurelius wrote in his private journals, "You have power over your mind, not outside events. Realize this, and you will find strength." But here's what he understood that modern investors miss completely. He wasn't talking about controlling your emotions. He was talking about something far more fundamental: your identity. Who you are when everything feels like it's falling apart. Because the market doesn't care about your strategy. It doesn't care about your research, or your conviction, or how many finance podcasts you've listened to. The market only reveals one thing. Whether you're an investor or just someone who bought some stocks, think about every red day you've experienced. Not the crashes, not the corrections, the normal ones. The days like today where nothing catastrophic happened but your portfolio dropped and you felt it in your body. That tightness. That urge to do something. Most people think that's just emotions. Anxiety. Fear. Normal investor psychology. But it's deeper than that. What you're feeling in those moments is your identity being tested. The story you tell yourself about who you are as an investor is being challenged by reality. And most people, without realizing it, fail that test every single time. The investor who passes that test doesn't feel less. They don't have ice in their veins. They've simply built an identity strong enough that a red day can't shake it. They know who they are, independent of what the market does today. You think the problem is the volatility. Marcus Aurelius knew the problem is always the instability of your self-concept. By the time you finish this video, you'll understand the difference. And more importantly, you'll know exactly how to build an investor identity that nothing can break. Let me show you what this looks like in practice. March of last year, one of our community members, a software engineer named David, had been investing for 3 years, built a solid portfolio, diversified holdings, long-term horizon, all the right moves on paper. Then one Tuesday morning, the market opened down. Not a crash, just a normal pullback, 0.7%. Less volatility than today. David was in a meeting when he felt his phone buzz. A portfolio alert. He ignored it. Meeting ended 20 minutes later. He checked. Down $4,000. Now here's where it gets interesting. David had read the Stoic principles. He understood intellectually that short-term volatility doesn't matter. He'd even written down S. Focus on what you control. All of it. But in that moment, sitting in his car, in the parking lot, staring at red numbers, something happened that had nothing to do with knowledge. He felt like a fraud. Not anxious. Not scared. Like someone playing pretend at being an investor. Like any minute someone was going to realize he had no idea what he was doing. That's the identity crisis. That's what red days actually test. Not your risk tolerance, your sense of self. David opened his brokerage app, not to sell, just to look, to review his positions, to make sure he still believed in them. He spent 40 minutes reading recent news about his holdings, checking analyst ratings, seeking reassurance. By the time he was done, the market had recovered. He was only down 2,000. He felt relief. He thought he'd passed the test because he didn't panic sell. But here's what Marcus Stone helped him see later. The moment David opened that app, he failed. Not because checking is inherently wrong, but because of why he checked. He needed external validation to maintain his internal identity. His self-concept, as an investor was dependent on the market agreeing with his choices. When the market said you're wrong with red numbers, he couldn't hold his identity steady. He needed to rebuild it with research, with news, with something outside himself. Compare that to another investor in our community, Elena. She's a teacher, smaller portfolio, less experience. That same Tuesday, same market drop, she got the same alert. Down $2,000. She was in her classroom between periods. She looked at her phone, saw the number, felt the spike of adrenaline. And then here's what she did. She closed the app. Not because she was suppressing emotion, not because she was pretending it didn't matter, but because she'd done something different weeks earlier that David hadn't. She'd written down her investor identity. Not her goals, not her strategy. 3 sentences about who she was as an investor independent of market conditions. I am someone who invests for 20-year outcomes. I am someone who expects volatility as the price of returns. I am someone whose decisions today are already made based on yesterday's research. She'd put it on a card in her phone case. When she felt that spike, she pulled out the card. Read it. And in reading it, she remembered. This red day wasn't testing whether her stocks were good. It was testing whether she was still the person she decided to be. The market recovered that day. It dropped again the next week. It's dropped today. And the difference between David and Elena wasn't knowledge. It wasn't experience. It wasn't even discipline. It was identity stability. David's sense of being an investor required the market's cooperation. Elena's didn't. She could be an investor on red days, green days, sideways days, because she'd anchored her identity to something the market couldn't touch. Her own definition. Marcus Aurelius faced this same test differently. He ruled an empire during plague, war, betrayal. His journals weren't about conquering anxiety. They were about maintaining identity when reality kept telling him he was failing. If you are distressed by anything external, the pain is not due to the thing itself, but to your estimate of it, and this you have the power to revoke at any moment. Your estimate, your definition, your identity. Here's what that means for you practically. Most investors never consciously define their investor identity. They just absorb one from the market. When it's green, they're geniuses. When it's red, they're frauds. Their identity is a reflection, not a foundation. And reflections shatter. Here's your one action. Before the next red day, before the next moment of doubt, write 3 sentences. Not about your goals, not about your strategy, about your identity as an investor. Who are you when the market drops? Not who you want to be. Who you choose to be right now. Today, independent of outcomes. I am someone who... 3 sentences. Put them somewhere you'll see them when you feel that spike. The next time your portfolio drops and you feel the urge to check, to verify, to find reassurance, read those sentences first. Don't suppress the checking. Just remind yourself who you are before you look. That's the difference. That's the test. That's what separates investors who survive every cycle from everyone else who's just along for the ride. The investors who survive every market cycle all share one trait. Next video names it.